All right. Good day, everyone. Hope you're having a wonderful, wonderful Thursday. And I am just pushing everything go now, letting people trickle in, and we're going to get started right on the hour. Excellent. Nice to see you. We're trickling in. Nice to see you, Wendy. Nice to see you, Nicole. Excellent. Excellent. We're trickling in. And I'm slowly live streaming on Facebook. I think we're good. I think we're streaming. All right. Good day, Facebook. Good day, everyone. Today, we're going to have another JK deal reveal, and hope you're going to enjoy this one. This one's pretty exciting, and I'm going to try to keep it shorter. This is really just to show how to quickly get in and out, how to quickly negotiate, quickly place offers, quickly analyze, and so forth. So look at us. We're already 7 o'clock right now, so let us begin. Here we go. Share this, share that, do this, do that, do the other thing. Fantastic. Okay, so we're supposed to have a special guest speaker today. Hopefully he'll be there in a minute or so. But here we go, JK Deal Reveal. Hope you're excited. Here we go. So why are we excited? Because we are going to show you how to analyze deals quickly, okay? We're not going to fall into the worst disease for real estate investors, which is analysis paralysis, okay? We cannot spend an hour looking at a potential deal before calling, placing an offer, or starting to take action, okay? You're going to waste so much time, and time is the #1 resource, so we need to learn to analyze deals quickly and take action quickly. So we're excited also because hopefully we're going to show you these deals. Sometimes they won't be deals, okay? Today it's going to be a deal, by the way, but sometimes it won't be a deal. And as we say, in the US, we have a place to invest in real estate for half the price and double the returns. And so I would like you to target 4 times better than in Canada by investing in the US. So we really got to figure out, are you investing, or are you looking for a place to live? Because it's very different. I'm always going to be talking about the investing, okay? And if you want to talk about a secondary residence or a partial investment or a place for you to live, that needs to be very clear up front. And I recommend, it won't be in the context of these calls very often that we're going to be talking about that. So Florida, Ohio, somewhere else. So long as the numbers work, invest wherever you find the great deal. But ultimately, I'll say it's probably easier to find some high cash flow buy and hold real estate in Ohio than in Florida. Not that it's impossible, I'm just saying if you're going to play the numbers game, there are some easier markets than others. So that's it. That's what I wanted to say. And today, I wanted to show you, let's just see if James is with us here, see if he's joined us. Not quite yet. So I'm just going to talk a little bit more here. Hopefully he'll trickle in because this is his deal. But I wanted to show you how the first 2 minutes of a deal could look like, okay? So let's say the first paragraph here. This is a message that this is real, right? This is the copy paste of what happened the first 2 minutes of this deal. A wholesaler emails and says, hey, this park has 35 lots with 35 park-owned homes full. Rent is $325 a month. City sewer and water tenants pay. Estimated NOI, or net operating income, $68,250. Asking $685. 2 minutes. I read it again just to make sure. So I see the NOI is the net. So after expenses, not a mortgage, but after all the other expenses, that's what's left over in 1 year. And they're asking $685. So basically, they're asking at a 10 cap, right? If you pay $685 and it creates $68,000, it's about a 10% return, a 10 cap on a cash purchase. Okay, so at least I have that thing going on in my mind. My reply, got your message. Based on the limited financials, we're just below 450K. The system comes out at 446,392 for our cash offer and quick close. That's the first 2 minutes of the deal. Through gaining more details, and through email exchanges with the seller, and et cetera, it's now under contract for 381. Okay, and we're going to see why that happened. So, excellent. But the point here is that with a very limited piece of information, depending on how you're investing, we are strong cash flow investors. So long as we can invest for strong cash flow and a discount on what it's really worth, its market value, those are the two golden rules of real estate. Buy for cash flow, buy under what it's worth, so buy equity. And with, believe it or not, with that paragraph that he gave me, that wholesaler gave me, I can put in an offer that satisfies those two criteria. And then after the fact, we're going to have to verify to make sure that those numbers are accurate and get all the secondary and tertiary due diligence items that we might be interested in. Okay, but 2 minutes, boom, I have an offer out. And then we can negotiate. And negotiations can be very quick or they can be very slow. So let's take a look. So we put in an offer very quickly and we start negotiating. We start to see where everything lies. We start asking for more information. At one point, we lock it up under contract. Okay, that was this point here. We lock it up under contract for 381. And then we ask for the real due diligence documents. All right, because this is what the seller told us the deal was. The seller told us that the park was generating $11,375. So if we take the rental income times the number of units, that's how much you get. That's the gross income. And then the seller stated some expenses like, okay, well, we have a couple that manages the park. It's $500 or $600 a month. Okay, there's insurance. It's about a little less than $2,000 a year, so $155 a month, and the taxes are just over $3,000 a year, so about $275 a month. So for someone who doesn't know what to look for, who doesn't have a framework to look at what expenses a property could have, they might think, well, this property costs $930 in expenses. So $11,375 is what comes in, $930 is what comes out, assuming there's no mortgage here. You might think that there's about $10,000 a month coming in net, right? But that would be a colossal mistake, and that's the point of these JK deal reveals, okay? This is what JK says, okay? After you put it under contract, now you have to verify. You put it under contract with the information that the seller, the broker, or the bird dog tells you, with whatever information, right? And based on that information, you trust it. You might challenge a couple things, and you might have conversations around it, but ultimately you trust it. Lock it up with those assumptions, and then in the due diligence period, that's when you want to verify them to make sure that those assumptions were correct and that the numbers still add up. So you lock it up. In the due diligence process, where I ask, for example, for the bank statements, the tax returns, the utility accounts, all that fun stuff, I realize that, oh, there's really only $7,800 a month of income, where the seller stated that there was over $11,000. That's a huge decrease. So the very first thing I do is look, the income is about 30% lower than what we said it was. So there's going to have to be a decrease of 30% in the purchase price right off the bat. Can we still have a conversation? That's basically the first step in that negotiation. And that's how, in the negotiation process, the price ended up becoming $381. Started at $685. I first initially got it on a contract for $446, and then every time that there was these problems coming up, boom, 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 boom. We're cash flow buyers. We don't care about the real estate. We want to buy cash flow. We want to buy equity. So if that's not what we're doing, we're not interested. So when we realized that the current income is $7,800, the story changed. Our offer has to change because it doesn't satisfy our metrics, our criteria anymore. But what's really interesting is that this property has a pro forma income. A pro forma means a dream income, a project income. It means if we put in sweat, capital, experience, and time, it could generate a lot more income. How? By increasing rents, by increasing any income, by decreasing any expenses, And how would you do that in a park, for example? Yes, you can increase rent, you can back bill utilities, you can add more homes if there are vacant lots, which there ends up being here. There's even a building on site that that has 4 apartments in it that are not currently rented. They need some love, they need some work and capital, but after they're rented, you can, that's income that's sitting there, that's just waiting to be tapped into. But it is a project, all things considered. Okay, wonderful. So James just logged in, so let me see if I can get him on our call here. Fashionably late as no, not as always. James, you're allowed to talk, but you're muted right now. So I was just going through your deal here, and I was explaining how what the sellers say originally and what the deals are sometimes don't always land up, don't always add up. So are you unmuted? Not quite yet. All right, so I'm going to keep on going here. So the pro forma income is what it could do. It's not what it's doing, but after putting experience, time, sweat, and capital, it could go up to that. And the goal should be to go up to that, but it is a project. Okay, and now we go into the expenses. Remember, the seller mentioned, my goodness, I'm having a hard time here. The seller mentioned these expenses, management, insurance, and taxes. But we know better, right? We know that if we want to get to where we want to go, the summit, we mustn't miss a step. And here are the steps of summit. There's stuff, all right? Don't forget it. There's licenses and permits and maybe an HOA. There's buffers. What's your vacancy assumption? What is the oopsie factor, or the little knickknacks that when you add them up actually add up to something? So in a mobile home park like this, I like to use $25 per tenant for the stuff budget, just as a catch-all, which could also include like legal, right? If you have evictions, it would fall into that, and so forth. Bank fees, all these little knickknacks, they do add up. And a lot of investors completely disregard those from their numbers altogether. Utilities. Okay, so typically if you're investing, there's water, sewer, gas, and electric. But when you get into the multifamily space, you might have trash getting added in there. And so those are utilities that you mustn't, I put it under utilities, but just don't forget about any of those as well. And the seller said that the tenant pays all utilities. So someone might say, okay, well, I don't have to pay anything. But there really are utilities for a property. What are there? Community lights? Are there common areas? Is there a maintenance building? Is there, again, the trash, et cetera, et cetera, et cetera. So we do want to verify to make sure that those utilities are as we need. Okay, exactly. Comment came in, the CapEx, exactly. So we're going to touch on that. The CapEx is either going to go into your maintenance budget and or your stuff, depending on how you like your numbers to play in. So next, maintenance. For maintenance, I like to put in $50 on a mobile home park, $50 per tenant per month, okay, for a maintenance budget. Okay, so you'll notice there's some stuff for the Dipsy, and there's some maintenance going in. So I recommend on a multi, at a minimum, $50 per door or per tenant per month is what you should have there. So the assumption here is that there are, the broker initially said there were 35 lots fully occupied, but when we pulled and we verified the P&Ls, the rent rolls, and all the due diligence, it's actually 25. So that's why that these numbers are based on 25 tenants right now. The mortgage, that's really on you. Are you buying with a mortgage, or are you just buying with a down payment? So that's a to be determined category, but it is an expense if you are buying with financing. Management, although mobile home parks could have cheaper management because there is less things to manage in a mobile home park typically. So there are management companies that could be at the 5, 6, 7, 8% range. Again, I like to be conservative. It's easier for round numbers, and sometimes there's an on-site manager that gets free lot rent. So I think at 10% is just a good placeholder overall, 10% of collected rents. So in this case, of the 7,800. Insurance, okay. The owner said that it cost him $2,000 a year to insure that property. You pull up the insurance policies, and yes, he is paying $2,000, but it's only civil responsibility. There's absolutely no insurance on the buildings or the homes. So that is a personal choice if you want to self-insure, which means not have insurance, or if you do want to insure the buildings and whatnot. So I put in as though we are insuring, which significantly does increase the expense for the insurance category. And taxes, he was right on the taxes. So trust but verify, basically, depending on how much buffer budget you put in there, you're between 3,000 and 5,000 of expenses. And remember, if you had just looked at what the seller disclosed just willy-nilly, if you hadn't dug deeper or didn't know to look any deeper, you might think there was 1,000. No, probably you didn't think it was just 1,000 and you knew to ask about some things, but you know about all of Summit. And that's the point really of this call here. So it goes from a 1,000 newbie expense to close to a 5,000 expense because you're not skipping a step along the way. And even with the correct Summit breakdown of expenses, income minus expenses, we are still in the double-digit cap range for this property with some interesting, very interesting upside that's easily attainable in this particular property. So, James, did you manage to unmute yourself?
Yes, I am
Oh,
here.
there he is. Fantastic. Thanks for joining in, James.
All right. You want me to put my camera on, or can I?
You can try to do that. You can try to do that.
I don't know. Well, the camera's not there. I don't know. Well, I'll keep it like this, I guess.
All right, sounds good. You have a nice picture going there, so we're good.
All right.
Excellent. So, James, I'm basically done. That's what I wanted to say about this. Is the deal reveal. But tell me, this is your deal. What makes you most excited about this particular deal, this property here? Why are you so excited about it?
Well, when you look at the numbers, the numbers are amazing. So it makes total sense to invest into it. But what excites me the most is to be with you in that deal, having you and your team over there to manage the whole thing. It is amazing. I mean, double-digit cap rate. So many things we can do to increase the revenues, and having somebody to manage it, in the US, to me, it's like a dream. So that's about it for me. Yeah.
With the team, you can get the dream.
Absolutely.
Thank you, James. But you mentioned increasing income on this property. How are we gonna do this on this particular deal?
Well, it's the net income that we have to increase. So we're gonna lower the expenses and increase the revenue. So we'll see exactly what we can do. We cannot add much homes on it, so we're gonna have to maybe renovate some homes and increase the rents, and see what else we can do with the properties. But on the expenses, we can certainly lower a couple for sure.
And just to go on that, so you'll remember from the initial message from the wholesaler that the park was full. Well, he wasn't exactly lying in the sense that there are homes on the park. There are 34 after we dig into it. There are 34 homes on the park, but 8 of those homes are not occupied. Okay?
They're empty. Yeah.
So are we like, oh man, that sucks, or are we like, oh man, that's amazing?
That's amazing. That's amazing.
Absolutely. And because all we need to do is put lipstick on those pigs, or hopefully a little bit more than that. But like, you can go really far with $5,000 on a mobile home. You can really, prettify it, make it rent ready, make it real nice, and slap a tenant in there that's now $325 a month. But what I didn't even say here is that if you compare the rental rates in this city to a 1-bedroom, 2-bedroom, or 3-bedroom apartment, okay, a 1-bedroom apartment right next door to this park rents for $550 a month. A 2-bedroom rents for, oh darn, I forget, it's about 700 a month, I believe. Don't quote me exactly. And a 3-bedroom, we're close to 800 a month. Okay, and a lot of these homes, mobile homes, are 2 to 3-bedroom properties. And so suddenly you have this way under market rent. So at 325, which is actually the average of the homes currently are 300. It's not even 325, but just bringing them up to a 1-bedroom apartment standard, you are almost doubling the current income from the properties that are there, plus all of the inventory that's not even making anything yet. So there is some tremendous opportunity in these deals in mobile home parks and apartment buildings where you have vacancies or you have under market rent for some of the units. This is tremendous opportunity so long as what you're buying when you buy it is a good buy, right? What are you buying the day you close, right? I'm telling you here, we're buying a double-digit cap as is. And then we can bring some value add and put that on steroids to get an amazing deal happen. I'm not saying buy something that only becomes a good deal after you do a value add process, because that's more risky, right? There's more risk involved because you might be buying something that has a negative cash flow that you have to pay every month if you're not buying it right from the start. So that's my 2 cents on that. And time just flies on these things. James, anything else you want to add on this particular, maybe something to look out for, something that this park has that you would be like, huh, normally it would be a problem, but in this case it's good, or just something that someone's looking at a park might want to pay attention to?
Well, we're in the middle of the city, so we have water from the city and sewer from the city too. So there's nothing to worry about in that park about that. These normal problems that you have with mobile home parks. Sorry.
Absolutely. Some mobile home parks have private utilities, so it's on well water and private septic, private sewer, whether it be a septic system, a sewage treatment plant, or a lagoon. So these are different ways that you can dispose of sewage privately, and that requires additional permits, a specialized certified operators sometimes, et cetera, et cetera, et cetera. Water testing, so there's additional costs and problems potentially. And when water lines break or the treatment sewage plant breaks and you need to replace it, that's not a couple $100, all right? That's a couple thousands, a couple tens of thousands often. So this particular park is not private utilities. This is a public utility park with public utilities, which is just another cherry on top. Something very important to keep in mind when you're buying mobile home parks. I'm not saying don't buy private, but be aware of what you're buying and make sure that even if and when you will need to repair or replace, that's factored into your numbers, into your CapEx. So in the stuff and your maintenance budget, make sure you're accounting for that because it will change the numbers significantly. Excellent. So that's it. Unless you have any final words, James?
Go get your miracle.
Go get your miracle, one property at a time. Wonderful. So I will, we're going to end this out now. Just wanted to let you know that at 8, so in just over half an hour, we are going to go for another full hour, which is the Now for Tomorrow Club Premium Mastery Call, which is part of the Now for Tomorrow Club. And that club includes our e-course, which is what to do before you buy your first property, and especially what the gurus don't tell you. I don't know if you've been to real estate seminars before, and kind of like the JK deal reveal, we talk about the deal because it's very exciting. These numbers are amazing, and wow, I want to do it. But there's a whole other side. The things that are less glamorous but are just as important, right? We built an entire e-course to structure you, to put the foundations in place so that you can build on top of that and use just these time-efficient strategies, systems, softwares, and tools. So that's what the gurus don't tell you. It's a whole e-course that we film for you. The Now for Tomorrow Club also has a resource center. So this is just scripts, contracts, a couple contracts, action plans, and just the resources, theory, booklets, ebooks, and so forth, all there together in the Resource Center for the Now for Tomorrow Club. We also have every single training we've done in the past. Once a month, we do a full-blown real estate training, which is actually going to be next Thursday. We're going to go over the BRRRR model of investing. So every month we've been doing that. We've been doing that for many, many months. Every Thursday, there's a mastery call in the Now for Tomorrow Club, which is basically there's a mini training, 15 minutes, and then you can ask me any question you want. That's your opportunity to bring your deals, bring your questions, and I answer them live in the group. And they're all recorded. So in the Now for Tomorrow Club, there's a library with all those recordings. And there's more recordings. We're quite active. All of these deal reveals are there. Our Key to Freedom program is there. So how to get started in the world of money and finance, and even before real estate, what's investing? What are the principles that I need, even if I'm 16 years old? How do I get started? All of those recordings are there in the JK library. And so, as I mentioned, next Thursday, it's the exact same link. So if you register to this Zoom at n4t.club/free training, that's how you got here, n4t.club/free training, you'll register to the next week. We're going to talk about the BRRRR. It'll be on September 24th. And if you're interested to learn more about the Now for Tomorrow Club, this is the direct link, n4t.club/NFTC, Now for Tomorrow Club, NFTC. And that's it. This is a super special promotion that's probably going to be ending by October 15th. You can test drive the entire club for $1. Okay, it's completely insane. Go take it for a test drive. Go get all the resources that you want or you can. Listen to all those trainings. There's so much content there that for $1, it's just ridiculous. We're giving it away. So if that's of interest, you won't find this information with any more value than here. So for $1, go get your miracle. Go test drive. And we talk about a whole bunch of things. We talk about lifestyle. We talk about short-term rentals. We talk about fix and flipping, mobile home parks. We talk about just creating the lifestyle you deserve. And that's it. That's it. If you want to submit your deal, if you have a deal and you're like, hey, I would like it to be featured on the next JK Deal Reveal, send us an email and we'll put it in the queue. We're already booked out for the next 2 weeks, the next 3 Thursdays, but go in there and send us, hey, this deal, can you feature this deal? I want to know if it's a good deal or not. And we'll go through it. I'll go through Summit. I'll go through as if this just came into my inbox. We'll spend 5 minutes live. I won't look at it even before, and I'll tell you what I think. How's that sound? So that's it. Hope you enjoyed. Thank you, James, for being here and for sharing your deal. And as always, do now for tomorrow. Take care, everyone.
Take care.